Welcome to a deep dive into Kenya's financial inclusion journey. And wow, are we going way back for this one? If you've ever wondered how a country goes from, having a large portion of its population financially excluded to being, hailed as a global leader in mobile money, this is it. We've got stacks of reports from FSD Kenya.
They're FinAccess surveys, to be precise.
Yeah. And we're ready to unpack nearly 2 decades of data.
I'm excited to dig in.
Me too. So our journey begins way back in 2006, like I was saying,
Right.
Back when even the term fintech felt, futuristic.
Definitely.
And what's so fascinating is that the first FinAccess survey from that year really reveals just how different the financial landscape looked back then. You'd be hard-pressed to find a Kenyan who wasn't relying on informal systems to manage their money.
Absolutely.
Think keeping savings, literally under the mattress.
Right. Or relying on those community lending circles, the chamas.
Exactly. Imagine a system where your access to credit relied on, social trust and community ties, rather than credit scores and bank statements.
It's incredible, actually. It really speaks to the ingenuity and resilience of people who had to find workarounds for a system that really wasn't built for them. But, and I think this is important, those informal systems could only get you so far.
Totally.
The 2006 data paints a pretty stark picture. A staggering 40% of adults in Kenya were completely excluded from formal financial services.
That's a huge number of people navigating their financial lives without the safety net of, regulated institutions. No access to formal savings accounts, loans, insurance. It's hard to imagine the challenges.
For sure, for sure.
And then, almost overnight, everything changed. Between 2006 and 2009, Kenya witnessed this meteoric rise of mobile money. And this wasn't just a technological shift, right? It was a seismic societal change.
Yeah, it's hard to overstate the impact of M-Pesa, especially. It completely revolutionized how Kenyans interacted with money.
And the data reflects that. By 2009, just a few short years after that first FinAccess survey, formal financial inclusion had skyrocketed to 40.5%.
More than double what it was just a few years prior.
Mobile money was a game changer. Really opening doors for millions who were previously excluded. But, with such rapid change, were there unexpected ripples in the financial pond? So we're moving into the 2013 to 2019 period. And the FinAccess surveys are showing this really fascinating shift. Mobile money, it was still huge, obviously, but it became less about access at this point and more about how Kenyans were actually using these financial tools.
Yeah, definitely.
Which is really interesting, right?
It is, yeah.
Because while the growth of, new mobile money accounts kind of started to level off, the ways people were actually using these accounts just exploded.
Right. It wasn't just sending money to family anymore.
Exactly. The 2013-2019 surveys show this huge e-surge in mobile banking, mobile loans, products like M-Shwari, KCB, M-Pesa.
Oh, for sure.
It was intense innovation.
It really was.
Everyone trying to find the next big thing in financial technology.
The next M-Pesa.
Yes.
Yeah.
But, and this is where things get really interesting, the 2019 data reveals this, bit of a paradox. So while financial inclusion was soaring high,
Everyone's on board.
84% inclusion rate, incredible.
Amazing.
Financial health, though,
Yeah.
not necessarily following the same trajectory.
Not quite.
It seemed to be, in some ways, declining.
It's true.
And it turns out, having access to financial tools, it doesn't automatically mean you have financial well-being.
Right. It's like having a kitchen full of ingredients but not really knowing how to use them.
Yes. 100%. And the FinAccess data from this period, I think it really forces us to confront this crucial question, were people actually benefiting from all these new financial tools? Or were there, these unintended consequences?
Right, lurking beneath the surface of this mobile money revolution.
Yes. And the 2019 report points to some potential culprits. So remember those mobile bank account loans that were, all the rage?
Yeah.
They provided much-needed access to credit, but the data also reveals this worrying trend: over-indebtedness.
Right, and think about it. The average mobile loan in 2019, it was around 3,000 Kenyan shillings, which, that's not a huge amount, right?
No.
But you get those high interest rates, those short repayment periods, and these small loans can really snowball into unmanageable debt.
And it wasn't just the debt itself.
Right.
The 2019 survey also highlighted, issues like unexpected charges and fees on these loans.
Oh, yeah, definitely.
Which just made the problem even worse.
For sure.
So it became clear, access to financial services. While, like, super crucial, it's not enough. And this period also really underscored the importance of, financial literacy. Because if people aren't equipped to understand the, like, terms of a loan or how to navigate the, complexities of mobile banking, even the most well-intentioned products can end up doing more harm than good.
Yeah.
Which brings us to, I think, the next, like, major turning point in our journey.
Yeah.
The year 2021 and the shadows cast by a global pandemic. So here we are in 2021.
Yeah.
And the FinAccess surveys, they really capture the, like, aftershocks of this massive global event.
Right.
That, shook the foundations of financial systems everywhere.
Yeah.
The COVID-19 pandemic.
For sure.
And it's no surprise that the 2021 data, that kind of paints this picture of, like, amplified financial fragility. This pandemic was like this unexpected stress test, you know what I mean?
Yeah.
Exposing all these vulnerabilities,
Yes.
even in the, like, most seemingly robust economies.
Right.
And for a lot of Kenyans, I mean, particularly those who are already dealing with the challenges that we were just talking about, the economic fallout, it was
significant,
devastating.
Yeah.
And what's so important to remember here is that the pandemic, it didn't create these challenges out of thin air, right? It kind of just, like, magnified
exactly
issues that were already
simmering,
yeah,
under the surface.
And the 2021 FinAccess report, I think it really drives home this point that financial inclusion, like, even when you achieve it at this huge scale, it's not a, like, static endpoint.
No, not at all.
It's this ongoing process,
right,
of evolution and adaptation, and I think crucially, like, learning from, what we do well, but also the missteps.
Oh, absolutely. Learning from our mistakes is key.
And honestly, that's what makes these FinAccess surveys so valuable.
Oh, they're incredible.
They become this amazing treasure trove of longitudinal data.
I love them.
Right? And they allow, like, researchers, policymakers to really track these trends, identify areas of concern, and hopefully, design interventions that actually make a difference.
That's the goal.
Right. And speaking of which,
yes.
Did you know that as we speak, the 2024 FinAccess survey,
it's happening,
is underway.
I know. It's so exciting.
I snuck a peek at the topic list for this year's survey.
Oh, really?
And let me tell you, they are not holding back.
What's got you, like, most interested this year?
Okay, so get this.
Yeah.
They're, like, delving into everything. I mean, the evolving landscape of digital credit.
Huge.
The implications of, like, climate change.
Wow.
On financial vulnerability.
Yeah.
The unique, financial journeys of women.
Of course.
The growth of, like, financial literacy initiatives.
It's amazing.
It's incredible to see how much, like, the scope of these surveys has expanded since that first one back in 2006.
It speaks to how much we've learned, really.
I know, in just, like, a couple of decades.
It makes you think, what's going to change in the next 20 years?
It really does. Like, what new insights, what's the 2024 FinAccess survey going to, like, unearth about the state of financial inclusion in Kenya? And I think, like, more importantly, how will these insights shape the future of, financial services, not just in Kenya, but globally?
Right, because it's all connected.
Exactly. And here's the thing. We've been talking about Kenya.
Right.
But these lessons, they have, like, ripple effects way beyond Kenya's borders. This is a glimpse into the future of finance on a global scale. So as you continue to, explore the world of financial inclusion, what lessons from Kenya's journey really stick with you? What insights are you going to carry with you as you, like, navigate all the complexities of finance in your own life, in your own community? Thanks for joining us on this deep dive into Kenya's financial inclusion journey.